So is the housing market headed for a recession? Well, that's what the mainstream media has you wanting to think. But what we're going to do today is we're going to go over all the numbers, and there's 6 big components I want you to review. I'm going to put the description in all these links down below so you guys can do your own research. But at the end of this video, I won't give you my conclusion. You guys conclude for yourself. And if you would, once you do that, put your information down below so we can share it with everybody. So without further ado, let's get to it. So let's start this out by supply demand, just economics 101. Where is supply and where's the demand? That helps us determine where prices are going to go. So let's get over to it. The first piece of the puzzle we want to look at is right here. So house sales fell nearly 6% in June. Housing market slides into a recession. Well, let's go over to this piece of the puzzle first to see where supply demand is. And this article actually condenses everything into one piece of the puzzle for us, so we really don't have to look much further. This is a post by Mortgage News Daily. They just posted this just the other day, and here's what it says. The National Association of Realtors says previously owned single-family homes, condominiums, townhouses, and apartments sold at a seasonally adjusted annual rate of 4.81 million units, a 5.9% decline from 5.12 in June. Okay, so that really doesn't tell us anything about, but it just tells us how many sales are occurring. Okay, but my question is, why and at what price? That's what we're trying to figure out. So, and is there a crash on the horizon? Well, let's go through this. Inventories are slowly rebuilding from its persistent record lows, but homes are still selling quickly. Let's go through it. Supply demand is right here. The supply, there were 1.31 million unsold homes at the end of July, an increase of 4.88% month over month. So that tells us supply is going up. Well, how about the demand? Well, that comes into play right here. Those listings are estimated at a 3.3 month supply at the current monthly sales pace. Okay, it's up a little bit from 2.9% on where we were. So let's put this in the context. In an average market, in a normal market, we see 5 to 6 months of supply, 6 months of inventory, and that puts us basically at equilibrium so home prices don't skyrocket or so they don't plummet. So this is telling us what? You guys determine that. But the next piece of this puzzle is, what are home prices doing? Are they crashing? Because I've been hearing since 2020, housing is going to crash. 2021 we heard that, and we heard it so far in 2022. So let's look at the housing price data that we have, and it's right here. This chart shows us home prices from back in 1963 all the way to current. You can see the big blip that we had in 2008, 9, and 10 right down through here. But here's where we were. So over the past 2 years, if you've been sitting on the fence, you had an average median home price of $329,000. What's it today? $440. So where are prices coming? It's not coming down yet. Okay, so that's that data point. The next piece of the puzzle is, I'm starting to hear a lot of rumbles, is foreclosures are going to run rampant. That's going to really crash the market. It's going to push a bunch of properties into the market. People are going to start having to sell, and the snowball effect is going to take place. Well, where truly are mortgage delinquencies? Well, this was just posted this month on the 11th. Let's break it down. The delinquency rate for mortgage loans on 1 to 4 unit residential properties decreased to a seasonally adjusted rate of 3.64. Okay, is that number good? Well, let's look at it as compared to history. Well, at 3.64, the mortgage delinquency rate is the second quarter fell to the lowest level since the MBA survey began in 1979. So that tells us mortgage foreclosures aren't coming into play to add supply to the market, thus crushing values. But why? Well, you should know this answer by now, but if not, let's get to it. Why are people not getting foreclosed on? Because everybody has equity. Because we saw the chart where home values have gone up substantially in the last couple of years. So this is going to really protect those that might be facing foreclosure because they could sell the property. So let's go down through here. Home Equity and Underwater Report, which shows that 48.1% of mortgages in residential properties in the U.S. were considered equity rich. What is equity rich? Well, basically, if you have 50% equity in your house, so meaning you only owe 50% of its value. Okay, so that's that piece of the puzzle. But the report also shows, again, because in 1920 or 2008 through 2010, one of the biggest reasons for the crash was nobody had any equity. So they had to fire sale their properties. So this report shows that just 2.9% of mortgaged homes, or 1 in 3 were considered seriously underwater. So 1 out of 34 homes is underwater. That isn't even close to where we were in the past. So now the next piece of this puzzle is people are saying, well, mortgage rates are way too high for the affordability of homes. Well, maybe it's not mortgage rates, it's the values of homes. And that's your conclusion to figure out at the end of this, where values are going. But the biggest thing is, are we in a recession in housing, and is the housing market going to crash? Remember, that's what we're talking about. Well, here's what we're starting to see on the average mortgage rates. These go back all the way to 1971. And you can see basically rates today are at the lowest point that we've seen previously from say 2008 all the way back in the history. We have the lowest rates today from ever in history, other than this little blip right through here. So mortgage rates aren't really the component that's crashing the market, it's values. But again, that's why I'm trying to present this to you, so you guys can make an educated choice. So the final piece of this puzzle are, do renters have it better? Well, let's see what's happening right now in the rental market throughout the country. So you go down through here, and this was just posted in, well, it says right here, August of 2022. What's going on with rents? Well, year over year, rent growth currently stands at 12.3%, but has been trending downward for the past. But you can see here, month over month, rents cooled. Now they're only up 12.3%. year over year. 12.3% rents are going up. The national median rent increased by a record-setting 17.6% in 2021. So basically, you've seen your rents go up at least 20% since 2021, based on the beginning of 2021 all the way through current. So what I want you guys to do is let me know, based on all the data that you were presented, do you think we're in a recession in housing? And do you think the housing market's going to crash? There's no right or wrong answer. I'm not FOMOing anything. I want your comments down below, please. So the reason why you really come to my channel every day is what's going on with mortgage rates. So let's get to it. Based on there's no economic data today, and that's why I did this lengthy video, is here's what's going on in the MBS market. The MBS market right now is crashing. And I think it was overseas. I think it was Germany or somebody came in with an inflation rate of about 50%. So inflation throughout the whole world is crazy. Actually, in the US, we have an inflation rate, well, they're saying right now about 8%. It is among the lowest in the whole world. So, but it's starting to play a role in havoc on the markets. So if you watch me every day, you understand what the MBS market does. So the MBS market's crashing right now, pushing up rates. And they're going to probably go up at least 0.25% today. But here's where rates are nationally right now. This is a post done by Mortgage News Daily on a daily basis. Here's the top 6 mortgage products out there. You can see the 30-year fixed, 15-year fixed, 30-year jumbo, 5/1 ARM, 30-year FHA, and the 30-year VA. Basically, there was no changes really yesterday, but today you're going to see rates go up at least probably 0.25%. So if you weren't locked in, we probably locked you in yesterday. If you're out there in the market, you're looking to buy a house, refinance a house, get pre-approved, anything in regards to a mortgage, we would love to help you. We're nationally chartered, so meaning anywhere in the whole country, if you're out there, you need help with a mortgage, if you're looking to buy, build, refinance, do a home equity loan, do a reverse mortgage. We're getting a ton of reverse mortgage loans in right now. If you're looking for any assistance on that, we would love to help you. And how you find out more about me and my team is visit us at therateupdate.com. God bless, guys. Thanks. Have a great weekend. I'll see you next week. Bye-bye.